You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the Options Insider.com, as well as, of course, from the ever interesting Options Insider Radio Network. Reminding you, if you like what you hear, this show, any show we do here on the network, and there's quite a few of them, keep rating and reviewing it wherever you get our content. Amazon Music, Apple Store, there, whatever they call it now, Apple Podcasts, Google Podcasts, Spotify, Podbean, YouTube, wherever the heck you get our stuff. Keep rating, reviewing, commenting on the latter case there in YouTube. Does help folks continue to discover the content. Keep sending those questions in too. We do love to hear from all you guys and gals out there. And let's see who we're hearing from on the old program today. Joining me once again from deep in the heart of Texas, he is the Southern Greasy Meatball, a.k.a. the Spicy Texas Chili, a.k.a. Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to Volatility Views, sir.
Yeah, it's good to be here. Quite the week we've had, huh?
Quite the week we've had, and indeed are still having. So let's get to it and dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the program where we break down the week that was and indeed still is from vol trading and trending and unusual activity in all sorts of perspectives. And if you want a little bit of vol movement, you got some in your back pocket this week. And coming into today's show, we were hot on the heels of multiple days of aggressive sell-offs out there. It did seem like maybe, perhaps, the worm starting to turn, maybe the bloom coming off the rose of the permabull that's had the bit in its teeth for many years now out there. Of course, people concerned about yields and everything else going on out there. Powell doing his best to spook everybody a little bit earlier this week, too. Either way, massive sell-offs. S&P off over 2% on one session. NASDAQ off over 3% at one point there, just intra-session. So big beatings, particularly on the tech-heavy NASDAQ side of the fence. And that meant vol roaring back to life. We had VIX cash and spikes both breaking the 30 handle again this week. And coming into today's show, it seemed like we were heading there as well. And markets were decidedly mixed and not a little bit of red. And now coming into the start of the show, again, this is why shows like Vol Views pose a unique challenge, because you can't really prep for them more than a few minutes before showtime, because the vol landscape is capricious. It moves around at its own whim, at its own behest, and it's certainly doing so today, because we were threatening that 30 hand, about a 29 and change or close to it in both spikes and VIX cash, not that long before showtime. And then right as the show kicked off, we saw the worm turning out there. Most of the major indices were firmly in the green. NASDAQ actually has tipped back to the red now, ever so slightly out there. That means VIX cash and spikes both back below the 28 handle, firmly in the 27 range. Spikes was at the start of the show was at 27.75, puts it up a meager point from where it was last week. Still up from where it was last week, but nowhere near as lofty as it was just even a few hours ago this morning. And VIX cash, same deal, was threatening the 27 handle in the wrong direction, down to about 27.25 when we kicked off the show, up about 1.25 points, but obviously well off where it was yesterday, let alone even this morning. So people were waiting for the vol collapse to kick in, and they didn't have to wait too long. It is collapsing pretty aggressively out there. VVIX at about a 125.5, so still frothy, still north of that 120 level that we've been watching pretty much ever since the pandemic kicked off. It's kind of became the floor out there in the pandemic season. But right now, we're still hovering around that level, 125.5, up about 1.5 points. We've been at that level for a little bit out there now. So a lot to unpack. Mark, we're kind of almost getting dizzy from the whipsaw action out here in the volatility space this week. What's been lighting up your tape on this week of more vol and then aggressively less vol, all in the same couple of sessions, sir?
Yeah, we've had some really crazy days, and VIX just kind of seems anemic, and that's what's kind of throwing me off here. Is we were certainly below the lows from last week, and vol futures just never took off. They basically just kind of slept through the entire sell-off, and it's got me kind of thrown for a loop. I'm not sure exactly what's going on. Right now, we're right near the highs of the day as we're recording this. The Russell 2000 is, kind of the lone slightly red piece. The VIX is down to 27. It did touch over 30 twice yesterday and today, but can't seem to hold it. And every time it gets there, that's been a buy signal, because markets have just bounced. One of the new indicators I've been paying attention to has been I run VXN versus VolQ. VolQ is that at the money vol. VXN is the VIX methodology for volatility. And when the two of those get on top of each other, that has basically marked for Mark and now Mark that it's time to go long NDX, and that happened this morning. That spread was got as low as about 2.5. So VXN was only trading about at a 2.5 point premium. So what that tells me is that skew is getting flat. And when skew gets really flat, that's usually a sign that the market is starting to hit some bottoms. So really just an interesting day today. And then I guess the other overarching theme is the death of the meme stocks. Names that are always in our top 10 that have been blowing up have just been crushed. Neo, Fuel Cell, Plug Power, BlackBerry, AMC, Nokia. Nokia's a little bit up today now. The lone winner in that group is GameStop, which continues to be a meme unicorn in terms of its strength. And lastly, oil is up again. OPEC didn't do anything with their outputs, and oil has bounced. And all day the major energy names have been strong. ExxonMobil is back above $60. BP looks like it's making a run at 30, and that's and CVX is approaching 110. So you've got a lot happening today, and the ARC names are down, and the old school boring names are up. How about this? Tesla is $580 now. It is back below 600. It's down 6% on the day. That is the lone, that and Apple and Amazon and Microsoft, the mega caps are really laying a boulder around the neck of the S&P 500.
I was just going to ask you about Tesla, because you kind of invoked the meme stocks. And, Tesla in many ways is the mother of all meme stocks, is it not?
Oh, 100%. And it's getting spanked. It's off close to 30% from the highs of January, right? More than 30%. It touched a high of 895 on January 26th. And now it's, like I said, $580. It's heading for a halving. And, it had gotten a little overbaked. The Dow, which is the industrials, is leading the major indexes. The equal weighted S&P, which is the individual S&P components start the quarter equal weighted. It's having the strongest day of anything. It's up about almost 1%. So just lots of stories out there. Lastly, I'll bring up the dollar, which has been amazingly strong as bond yields have moved. Although it appears bond yields are finally falling thanks to answering the prayers of Jerome Powell.
Yeah, Powell came out and just kind of kicked everybody in the teeth the other day and really spooked the market, which was kind of interesting to see after he just kind of talked them off the ledge a week or two earlier. But since you invoked the mother of all meme stocks, let's go there really quickly, because it's kind of hard to talk the volatility conversation these days without addressing that, because Tesla now is kind of the nexus. It is the overlap of the Venn diagrams of Bitcoin and Tesla, two of the most volatile names already, and now they have come together like some sort of meme Voltron to dominate things. Of course, everyone's laying this new rash of volatility out there in Tesla, and it is volatile. On the Bitcoin acquisition, you kind of just pointed it out there, Mark, that it hit the peak in late January of around 880, I believe 883 to be precise, and ever since then, it's just not ever since then, because it obviously did have a trajectory around that level for a while. It wasn't straight down, but certainly in the last month and certainly a few weeks, it's had quite the rough run. It's off 36% from that high. It's shed 305 billion with the B in market cap, listeners. That was as of this morning, I do believe. So just in case you're looking for more records for Tesla, no company in the history of equity markets has ever shed that much market share so quickly. Just 5.5 weeks to shed all that. Just by way of comparison, how much money? I mean, you might say, okay, 300 billion, whatever. 300 plus billion. If you add that up, that exceeds the actual market capitalization of pretty much every other company on the planet, except for the top 16 names in the S&P. So they've already shed just about every other company on the planet, if not more so, in just the last 5 weeks and change. By the way, everyone was pointing out, the the Bitcoin connection. Oh, they bought Bitcoin. That was the beginning of the end. Maybe that changed your outlook on the stock as a result. So that could have certainly led to some of this sell-off. But the notion that Bitcoin has sold off and dragged Tesla down, not so much, because when they announced their purchase, Bitcoin was around 45,000. Obviously, they bought it a little bit before that, so they probably bought it even below 45,000. And coming into showtime, Bitcoin was still around $2,000 to $3,000 above that level. So it's certainly been volatile, but it's not like Bitcoin has been annihilated back down to 10 or 20,000, and that has taken Tesla with it. But Mark, what are your thoughts on this narrative that's being put out there that Tesla is now a different beast, a more volatile beast post Bitcoin, sir?
I mean, Bitcoin is a volatile product, but Tesla implied volatility is 87. I think that might actually be. I got to check on with my Genesis Vol stats, but that's right around the same volatility, I believe, as where Bitcoin trades. I'm looking right now, and the implied volatility for at the money Bitcoin is right around 82. So it's trading at Bitcoin vol, which is nuts when you think about it. But this is what, the seventh largest company in the S&P, and it's an 87 vol. It just, you wonder why the VIX is so high. You've got Tesla in there and some of these other monster names that are absolutely, seeing much higher volatility. Apple is near 40. Microsoft, boring, sleepy old Microsoft is a 30 vol stock now. So it's just, it's a new normal for implied volatility, I guess.
Well, since we're talking Tesla, we haven't done our little check-in of the catastrophe put scenario in quite some time. And they were open. Obviously, there were a lot of them. A lot of them went off the board in January. January seems to be where a lot of these line up. It lines up with the end of the calendar year. I get why they like Jan. There certainly is a lot of Jan love out there. But, Mark, it does seem like the catastrophe put mode has really kicked into high gear. I won't make you guess because it's a lot of contracts and it's an interesting strike, but maybe not one you would guess. But we are seeing the usual conglomeration of paper around the one strike puts in June and Jan of next year. And they all have decent sized paper open. 75,000 of the Jan 2022 one puts are open. 115,000 of the June one puts. 2022, by the way. So June of next year, one put. So we used to have our rash of one puts in there that we used to seeing, but the number one open position right now in Tesla options. I probably shouldn't say this. I probably could use this as a poll, but we'll put it out there anyway because it's fun. If you miss vol views, you get to vote in our poll. But it is the March 20 puts. Mark, there are 313,000 of these things open right now. So that's about 3x of the normal catastrophe put size we've seen out there usually of late. So it does seem like things may be ratcheting it up in that neck of the woods, sir.
Yeah. Wow. Yeah. More trading today. These are, they were buying them today. I don't know why you buy 1 year out puts that are $570. Maybe it's the bondholders that are using it as a hedge. That would make some sense to me. But that would be the only logical person that I could see buying such an inexpensive put. I mean, the 5 puts for a year from now are 4 cents at a dime. So, Tesla haters, there's your inexpensive strike. One of those have traded today. Somebody paid 10 cents to buy a 5 put that expires in a year. So confidence in Tesla, not high among leap put buyers. Be warned.
No, this is orders of magnitude more than we're used to seeing out here. So that's fascinating. Maybe I'll start doing our Tesla catastrophe put watch again. That certainly gets a lot of people riled up. And it's interesting stuff out here. Someone asking in our chat, Mr. Unlimited, what about Apple? They're down 31% in 20 days. Isn't that more than Tesla? So peak to trough here. Well, you said in 20 days. We were talking about 5 weeks, 5.5 weeks for Tesla. So a little bit longer period. And obviously maybe underlying movement, but we're looking here. Also, Mark was talking percentages involved, talking about the options themselves. Obviously, Tesla trading at a much higher vol level. I'm looking at Apple right now. Apple's around a 120 level, and most of the top trades today around the 120 strike to up to 140 strike are going off at vol levels around a 37 to 39%. So from an options vol perspective, which is really what matters at the end of the day, Mr. Unlimited, Apple, a much less volatile beast than Tesla. I think you can see why. They don't, for example, they don't hold $1.5 billion worth of a very volatile cryptocurrency on their balance sheets. But I digress. Let's keep rolling. We could talk Tesla for the rest of the show. Maybe it's time to have a Tesla update show. An interesting idea. But let's keep on rolling right now into the mainstream volatility landscape. Let's start in Spikes land. We were talking out there about the Spikes options on the show last week and how that person who had that size vertical versus puts in February obviously went off the board. They put it back on recently, and that is still the size position out there in Spikes options right now. We've got the March, so obviously they rolled it to March 32 half 40 vertical, 1,000 by 1,025, a little bit extra ratio out there, versus about 1,000 of the March 28 puts. Looks like they rolled down that put strike a little bit. It was 29 put, I do believe, last month. But other than that, that's still the same size position out there, and that's the one that's still dominating the tape out there in all things Spikes options land. Let's go on out to VIX options now. And, I thought maybe this little bit of vol collapse would goose the egg a little bit out there, would goose it. Get a little bit of vol kicking out there, a little bit of paper on the tape out there. But so far, a pretty light day out there in VIX land, a little bit north of 250,000 contracts on the tape as of a few minutes ago, about 265,000. That also reflects a general trend we've seen out there in VIX options. Outside of like the last session or so, it's been a pretty anemic week. The ADV is actually down quite a bit from last week. The ADV now is back well below 700,000. It's 632,000 out there in VIX land right now. So that's down a whopping 86,000. I was kind of wondering, once it ticked north of 700,000, how long it could maintain that. And the answer was not long, because it's down nearly 100K just, in the last week. Let's go on out to the top VIX options positions, see what the size big players are slinging out there. Cost you 159,000 contracts to break into the top 10 in VIX land, listeners. That gets you to the April 22 puts, number 9, 160,000. It's just a tick more for number 9. We got the March 23 puts, by the way, a whopping 2 calls in the top 10 this week. That's double from what it was last week. We had a whopping 1 last week. Number 8, also 100, nearly 161,000 of the April 18 puts. Number 7, our first of 2 calls in the top 10, 175,000 of the April doubles. Number 6, 183,000 of the March 20 puts. Number 5, 196,000 of the March 22 puts. Number 4, 200K, almost exactly, of the March 17 puts. Number 3 here, 200,000 and 700 of the second of our 2 calls, the March 60 calls. Numero dos here, 214,000 of the April 20 puts. And number 1 with a pretty small bullet, 217,000 of the March 21 puts. There are some times when that's not enough to even break into the top 10 when VIX is really frothy out there. So 217,000, not exactly big numbers, even though the OI is still looking pretty decent at about 9 million, almost exactly, about 4.35 million on the calls and about 4.65 million on the puts. So again, puts still outnumbering calls overall in the OI. Again, kind of reflective of maybe where we are right now in the volatility landscape out there. I mentioned 265,000 contracts on the tape. Let's see what the most active contracts, the big trades, are going up today. The most active contract today, April 22 puts, 36,000 of those on the tape, followed by the March 25 puts, 26,500. Then we drop off a bit for number 3, the April 24 puts, 18K of those. Number 4, March 22 puts, 13,000 of those. And round out the top 5 here, our only call in the top 5, 13,300 of the March 40 calls. Like I mentioned yesterday was a little bit more interesting, more active day, probably pretty much the most active day of the week, listeners. 871,000 contracts on the tape. Couldn't quite break the 1M, the 1 million mark, but got pretty close there. The biggest, most active contracts yesterday were the April 60s with 87,700, followed by the April doubles with 84,000, almost 85,000. That looks like that was actually a vertical, listeners. The April 55-60 call spread went up yesterday a whole bunch of times, including a block of 42,185. Paper bought it, looks like, for about 24 cents. It's like they did a total of about 80-odd thousand on the day. So that was kind of the big trade out there yesterday. Obviously about 160,000 going up just in that vertical alone in terms of total contracts. Number 3, we got 62,000 of the March 28 calls. Number 4, 42, almost 43,000 of the April 19 puts. And rounding out the top 5 here, 40K of the April 18 puts. Then we go back to Wednesday, a little bit less paper, 418,000 contracts on the tape. Number 1, 37,000 of the March 25 calls. Number 2, 33,000 of the March 30 call. Wow, 2 calls. That kind of reflects where we were midweek. Number 3, 22,000 of the March 22 puts. Number 4, 17, almost 18,000 of the March 23 puts. And rounding out the top 5 here, 14K of the March 22 puts. March 20 puts. Tuesday, 370,000 was the total on the day. The most active contract, 43,000 of the March 22 puts. Number 2, 41, almost 42,000 of the March 25 puts. Do I smell a bit of a vertical? Perhaps. Number 3, about the March 20 puts dropping off quite a bit down to 20,000. Number 4, June 110 calls. We're back in that stratosphere, listeners. 18K of those bad boys. And round out the top 5 here, 14,000 of the March 30 calls. So again, midweek, we saw some upside in the vol space. So we're starting to see some calls claw their way back into the top 5. Let's see what we had on Monday. Monday, the second most active day of the week so far. 529,000 contracts on the tape. The big most active contract, 33, almost 34,000 of the April 30 calls, followed by 32,000 of the April 26 puts, 28,000 of the April doubles, 20,000 of the April 27 puts, and rounding out the top 5 here, 20,000 of the April 27 calls. So, Mark, it's been an interesting week, a back and forth week when it comes to all things volatility. What was lighting up your tape this week? Did you notice this April double 60 pretty sizable trade yesterday, and anything else coming across your radar that made you scratch your chin and say, in VIX options this week, sir?
Yeah, there's been a pretty voracious appetite for April options, mostly puts, all week. They've been fading a move all the way down. Like I said, the vol curve never picked up. VVIX never really got a bid. There's just zero chasing of premium in options as we were falling off. It was kind of like everyone was just like, okay, this will end. We'll just sit here and wait. The April doubles in particular, I think are interesting. We saw that big 1x2 trader last week, more April downside trading this week. Just kind of tells you where the market sees things in terms of where we could go. Lower in April.
That does seem to be the trend out there because our old friend VXX is giving up the ghost pretty readily. Already it's down to about 1560 listeners. That puts it down about 0.2 of a point from last. So it's already down from last week, listeners. It was north of 16. Not that long ago, just when we kicked off the show, it was north of 16. So VXX had that brief moment in the sun. It kind of just goes to show, I think a point the Rock Lobster made on the show a few weeks ago there. If you got that VXX upside, that's a difficult dance, and you got to really get the heck out of Dodge pretty darn quick before it just gives up the ghost here. Let's see, total of about exactly 300,000 contracts on the tape today. That's pretty decent paper, especially considering the ADV is about 378,000. That's also down. So kind of volume down across the board in the vol space over the course of the past week. It may surprise you given how much vol was on the tape this past week. But outside of a couple of sessions, there wasn't a heck of a lot really lighting it up. ADV 378,000 in VXX right now. That's down about 25,000 from last week. So this one was also north of 400K. So both VIX and VXX coming in quite a bit in terms of ADV. Let's see what's dominating the big positions out there in VXX land right now. Cost you about 29,000 to break into the top 10. By the way, it's now 60-40 puts to calls. So a few more calls have snuck in there since our last show, including our number 10 here, 29,000 of the March 17 calls. Number 9, 34,000 of the April 15 puts. Number 8, 36,000 of the March 30 calls. Number 7, 39,000 of the March 16 calls. Number 6, 41K of the March 13 puts. Number 5, 48,000 of the March 15 puts. So you're going to get a little put strip here, listeners. Number 4, 50K of the March 14 puts. Number 3, 51, almost 52,000 of the April 14 puts. Numero dos here, 53,000 of the March 16 puts. And number 1 with a bullet out there, still the big dog, the March 20s, 84,000. Those look like they've come off a little bit because I think they were north of 90,000 open there, but it's still the big dog by a pretty substantial margin. Total of about 2.3 million contracts outstanding there, about 1.2 million on the calls and about 1.1 million on the puts. So calls still winning the dance when you add it all up out there, which is kind of fascinating. In terms of the most active trades today, what's lighting it up? The most active contract is actually pretty active. It's the March 15 half puts going out today, so expiring on the 5th, doing 31,000 contracts. That's a pretty decent clip. Those are kind of VIX numbers out there. Number 2, we got the March also expire. Pretty much everything is expiring today except for number 5. 16 half calls, 20,000 of those. 17,000 of the March 17 calls. 16, almost 17,000 of the March 16 calls. The only contract in the top 5 of VXX today that's not going out today are the March 43 calls expiring next week on the 12th. About 15,000 of those bad boys lighting it up out there. Mark, this has been kind of an emblematic week for VXX. It kind of goes up with a shrug and it comes down with an aggressive roar. Mr. Meatball, what's been lighting up your tape out there in VXX this week, sir?
Yeah, I mean, it never got the highs from last week. This goes to that March future, which, should be getting more reactive to VIX and was actually less reactive. And again, it's a lesson on how to use VXX. And the answer is you use it intraday, maybe overnight, but it's not a buy and hold. It will absolutely crush you if you try and hold it.
Certainly did a wee bit of crushing out there this week. Let's go on out to UVXY really quickly as well out here. This is, again, not one we always talk about, but it's an interesting one. And again, one of the last of the Mohegans, and also giving up the ghost as well. It was at about a 9.6 coming into showtime. I put it up ever so slightly, about a tenth of a point on the week. Now it's down to about a 9.2 coming into the latter portion of the show. That puts it down about a third of a point from where it was this time last week. So UVXY also won to just kind of give up the ghost. And it's doing that yet again out there. 341,000 contracts on the tape out there right now. So decent paper, all things being equal out there. ADV also not exactly giving up the ghost the way the ADV did in VXX and VIX this week. The ADV is only down about 1,000 contracts, down to 412. It was 413 last week. So people still liking themselves and slinging themselves a little UVXY. Let's look at the top positions out here really quickly in UVXY land. This is kind of the inverse of VXX. Only 3 puts in the top 10 over here. Number 10, 16, almost 17,000 of the March 15 calls. Number 9, 19K of the March 100s. Or excuse me, June 100s. June 100 calls. Wow. Okay. Number 8, 19,000 of the March 9 puts. Number 7, 19, almost 20,000 of the March 11 calls. Number 6, 20,000 of the March 12 calls. Number 5, 21K of the March 7 puts. Number 4, 23K of the March 9 puts. Number 3 here, 27,500 of the March 10 calls. Numero dos here, 36,000 of the June 5 calls. I hope someone has a June 5 par vertical on. That would just crack me up. And number 1 with a bullet, 36,500. So ever so slightly more than number 2 of the March 10 calls out here. Total about 1.35 million contracts open, about 900K on the calls, and about 430 or so K on the puts out there. Mr. Meatball, I know you guys keep an eye. I think you've been even more of a fan of UVXY than your compatriot over there, the Rock Lobster. What are your thoughts on how this bad boy has given up the ghost this week as well? And also, is that you on the June par strike there in UVXY, sir?
No, that is not me on the June pars, nor would ever be. What kind of move would we need in VIX for UVXY to get to 100?
I was just thinking of that myself. I was like, in what scenario would that even begin to remotely make sense?
That it's just absolutely bananas. It looks like, it looks like nothing ever happened. Again, never reached the highs from last week, and had, kind of touched 8.5 on Monday. Got a nice rally and is essentially given up 2 days of gains to of huge selling in the S&P to be essentially unchanged from the close from Wednesday. It's just it's even worse than VXX. If you want to be long, you can maybe hold it for trading period purposes, but that's about it.
I'm just looking here. I got to see if I could find what the deal is with those UVXY June par calls, because I'm sure you are as intrigued as I am as to when these were put on and in what capacity. Of course, when I need it, my system is deciding to be sluggish. All right, they were put on the 28th of January, about almost 11,000 traded that day, 10,800. And that was all increasing. They were crushing the bid on those at the time. They got for $1.44 on those bad boys. Wow, they traded for $1.44. And then the next day, another 8,000 traded. So a total of about 18,000 over there. And those traded for $1.75 the next day out there. Wow. And then another 1,300 just traded. They've kind of traded steadily ever since. But that was kind of the kickoff point there. They've done a couple of hundred to a couple of thousand steadily since then. So this park strike has actually been fairly active here in UVXY, which is just a fascinating. The ADV on the strike is 122 contracts. Wow, that's not what I expected. I need to dig a little more into that strike. You know what else we need to dig into a little bit, listeners? A little bit more single name vol action, because there has been quite a bit of it. You know where to find most of this data for yourselves over there. TheOptionsInsider.com is the place to go. Click on that options news and articles tab. You too can see the smorgasbord of data that is the earnings move results, and earnings season reports. Let's kick it off. On Monday, we had NEO, Zoom Video, two big ones you guys and gals like to trade a lot out there. Number two on Tuesday, we had Target, lots of T's there, Kohl's, Nordstrom's, and Hewlett-Packard. Wednesday, Dollar Tree, Wendy's, Marvell, and Splunk, everyone's favorite. On Thursday, we had Kroger, BJ's, Michael's, Costco, and Broadcom. Big lots today. We got some of these reports. They came in hot off the press right before the show yesterday. Let's hit a couple of them really quickly. Costco, they were popping off yesterday after I don't have a results report for them yet. Let's see if we can see where they are right now. Let's see. Okay, because Costco, as of this report, they were trading about $3.24. They were pricing in $9.50. In the past, they moved $7.50, and right now they're at about $3.15.79. So it looks like they're kind of a little bit in line with what that straddle was pricing in, which is kind of actually a little bit light. So kind of interesting here because they were pricing in a little bit extra juice. You were kind of wondering if that was merited. And at least right now, it's like in the depth of the sell-off, they got down to 307. So in that sense, yeah, the vol was merited. But looks like they have rebounded pretty aggressively, actually, ever since the warm started turning in the broad market. This is just over the course of the past hour and change. They've rebounded from 307.5 up to nearly 316. So, wow, quite the run. So I guess hard to argue that vol wasn't merited out there in Costco. Slack was also popping off after the bell yesterday. They were at 40.25 as of this report. They were pricing in 345. In the past, they've delivered about 242. And they're almost exactly unched. They're at 40.43. So it looks like all of that 345 went to waste. Even though if you held on to it for a little bit, they got down to, looks like 39.83. Not much at all. So, wow. Looks like they're just kind of glued to that 40 strike pretty aggressively there. So I guess good news for all the premium sellers out there in Slack. We also have the results reports here. Actually, no, these are for next week. So Fossil. Next week on the 10th, they were at $16, almost even as of this report. They were pricing in $2. In the past, they moved about $3.13. So a little bit light on the fossil vol front. Oracle Also on the 10th, $67 as of this report. They were pricing in $316. In the past, they moved about $350. So also a little bit light on the Oracle side. One of our odd block favorites, Stone Cold, a.k.a. Stone Co., on the 11th next week, ticker symbol STNE, listeners. They were at 82.31. They were pricing in 7.38. In the past, they've moved 9.02. So also a little bit light there as well. We do have some results reports from some other names that popped off this week as well, including some hot names like Snowflake. Everyone was all at Twitter about Snowflake when it went public last year. Seemed like it kind of fell off the radar for people pretty quickly. They moved on to other names. Looks like the meme names kind of sucked up all the oxygen in the room and left Snowflake, at least from a mind share perspective, kind of holding the bag because they were pretty much right at where they IPO'd now. So kind of net a whole bunch of nothing in between. They were at about 247, which is not that far from where they IPO'd. 247, pretty much even as of this report. They were pricing in 9.5% vol. They delivered 4.3%. Let's see where our friend Snowflake is hanging out right now. So 238, they're about a couple bucks higher, 238.5, a couple bucks higher than where they were in this report, but still is kind of actually getting back closer to where the stock was. So yeah, not exactly meriting that vol. Marvell, 45.5 when they went into their announcement. They were pricing in 6.7%. They delivered 7.2%, so slightly outperforming. And again, this is a frame of reference question, right? So let's look at where it is right now. Now it's at 40.75. So they have sold off pretty aggressively. So if you held on to that vol for a little bit longer to the end of the week, looks like it kind of worked out for you. Mr. Meatball, any other earnings or single name vol activity lighting up your tape, or indeed the tape? I haven't asked you. Have your crazies in the pitch yet? Have they gotten into this meme stock palooza, sir?
I mean, we definitely trade it. Certainly in our Robinhood trader, we've been all over these. We were short BlackBerry today, took that off. Some of the names that are starting to act like meme stocks are some surprising ones, like, GE and Marathon Oil was up huge today. Here's a name that's moving nicely today. Our old friend SIBO Holdings is up 7% today. It's up $7 whopping, back above 100. Massive candle. 3-month high, not the 52-week high, but definitely at a 6-month high. So one has to wonder whether we're going to start seeing some increasing VIX volume, because that's the only reason why you would want to be long SIBO here. There's a huge bump in single names, but we all know SIBO makes most of their money off those SPX and VIX options. They make a lot of money off of those. And ADV in VIX, as you said, is down. SPX is hanging around 1.15 million. And, that's about normal, maybe even a little low of where it's traditionally hung out.
Yeah, that's an interesting one. I need to dig into that a little bit because, they put out their numbers for February. They were decent, but nothing to write home about. As you mentioned, they did decent in the overall options market share, but they make their money in the proprietary stuff where they have 100% market share, namely SPX and VIX. And as we all know, VIX futures have been in the toilet ever since 2018, pretty much, in terms of every time we look at the numbers, they could be record numbers like January or December from an options perspective, and VIX futures are still anemic. Index options volume is also usually pretty anemic. So those are two areas where SIBO is heavily concerned. I mean, maybe it's the rumors they're talking about listing a Bitcoin ETF with Van Eck. Maybe that got some of this juice going. Looks like another company is also perhaps transferring some of their 4 fund listings, Davis ETFs, to SIBO. I'm not sure if that's enough to really goose this, but either way, you're right. This is a pretty big run, 8.25% for SIBO on an intraday. That's a huge pop on a time when, you're right, VIX and SPX are not exactly lighting up the tape out here. That's an interesting one. I need to dig into that a little bit. But we also need to dig into some of your questions and comments. It is time to check the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. You guys know how to get at us at Options on most of the major social media platforms. If you're listening live, we tend to bump you up. We also have, of course, the questions at the Options. And so you can get at us any number of ways. Smoke signals also occasionally works, at least if you're here in downtown Chicago. We have Born Slippy. I like that handle. He's listening to us there. He's chiming in about how we were talking about Tesla, perhaps. Is it more volatile post the Bitcoin acquisition? He just chimed in. He's obviously been listening to the shows because he's saying more sellers than buyers. Yes. I like that, Born Sleepy. You are starting to agree to my mantra there of more sellers than buyers, more buyers than sellers. At the end of the day, that's what all of this amounts to, right? We try to do all these other efforts to try to analyze this stuff, but there's more sellers than buyers at the end of the day. So I'm glad to see you're listening. I'm glad to see you're coming along to my way of thinking there, Mr. Born Slippy. I like your handle there too. Mr. Unlimited also chiming in. He was chiming in before about Tesla and Apple. He said, what about Apple? And they're down 31% in 20 days. Isn't that more than Tesla? He said, no, he's talking about market cap. I'll have to check. I don't have the Apple market cap from their highs back in January and February off the top of my head. I'll have to go dig that up and see. But we were kind of talking more from a vol perspective, what's more relevant to us, which is, of course, how that translates into implied vol in the options. And from a Tesla perspective, obviously a lot more action out there as well. Oh, he actually chimes in here. It looks like on Twitter here as well. He says Apple closed January 26 with 2.403 trillion. Say that out loud, listeners. And market cap is currently worth 2.011. What could you buy with $392 billion there? So yeah, I'll have to check those numbers and see. I was pulling some of that off the cuff from some Forbes analysis, but it is possible that perhaps they were mistaken. Our listeners are a keen-eared and keen-eyed bunch. That is quite possible there. So well done there, our audience. Speaking of our audience and Bitcoin, we asked you guys earlier this week. We said Bitcoin has exploded onto the radar in a big way. However, many people still think we need an ETF in the U.S. before this product can break into the mainstream. So we asked you this week, our poll question, will a Bitcoin ETF launch in the U.S. in 2021? And coming into the show here, we had yes at almost 60%, 59.6%, no 18.2%, and you just want to sling some Bitcoin options. I'm with you, all of you who said that, at about 22.2%. Mark, I know you're paying more attention to the crypto options space these days. What are your thoughts on this kind of ongoing debate about do we need an ETF to really cement it in the mind of the trading public? And if so, how do you vote in our poll, sir?
I think we do need an ETF. I think that'd be nice. Something that we could trade options on would be awesome. And let's do it. And I think everybody in the poll is going to be on board too.
Yeah, it certainly wouldn't hurt to get an ETF that all you folks can sling in your securities account. So that saves you the extra hassle of having to go to a Kraken or a Coinbase or something like that. Even though I know more and more mainstream brokers are starting to make crypto a little bit more accessible in those accounts. But still, if you're going to sling the options, for example, you still got to go futures options on like a CME or some of the mini options. I haven't slung those over there at LedgerX. I want to get them on our crypto show. Again, we haven't had them on in a little bit to kind of check in on how things are going because they're kind of outside of CME, the only other real dog in this race here in the U.S. All right, let's go on here. A little bit of love from Brewer. Brewer says, I look forward to my weekly dose of volatility views. You guys are the best. Thanks for taking a whole week's worth of volatility action and condensing it into 60 jam-packed minutes. I haven't missed an episode since 2016. Oh, so you're an old-timer. That's good. Thank you for that, Mr. or perhaps Mrs. Brewer out there. We appreciate all of you who've been listening for a long time, who continue to write in, who get a lot of value out of it. And also, you recognize the effort that goes into said effort of and said work of condensing a whole week's worth of action and a whole bunch of products into 60 minutes here. We could obviously spend hours just talking about each individual product here, listener. We try to squeeze all the nuggets, all the highlights here. Maybe we should change the name to Vol Highlights, but it doesn't have the same sexy ring to it as Volatility View. But thank you there, Brewer. What do you say, Mark, Mr. or Mrs. Brewer there? Loving the show all the way back since 2016, sir.
That's awesome. I'm glad you're a listener since then. Hopefully we've helped you trade volatility at your best. It's what we want to do.
And if it's the worst, then blame the Rock Lobster because he's not here. Speaking of the Rock Lobster, someone chiming in. We were talking with him yesterday on the option block about he was talking about SQQQ, kind of obviously that levered inverse Qs product out there, but how it's crappy, but it pairs well with VIX in environments like we saw yesterday when we see tech kind of dramatically underperforming. A wonk of Wall Street heard that. He said he agrees, but he had no VIX position. I was like, okay, well, you're missing out on the first leg there. Wonk of Wall Street. He said he had a bunch of SQQQ for most of the sell-off. Felt like he made no money. Yeah, that's what we're saying. These products are these levered things and these inverse things. They're Franken products, and so when you don't get the bang for your buck that you're looking for, it's hard to really cry foul. These things are kind of weak. What Andrew was talking about was a very specific, limited kind of intraday, short-term scenario where you're kind of relying on SQQQ to do its predictably crappy thing, as he likes to say, but he also had the VIX to capture the pop. You were missing that leg. In fact, you chimed in again and said you actually had XLK put options earlier in the sell-off. That's obviously the Tech Select ETF. And he said there was no liquidity in those. Well, that's not a good thing, but was able to make some money there. QQQ options were too expensive. VIX or VIX futures. So VIX options or VIX futures probably would have been the best combo. Yeah, definitely better than the illiquid XLK. Let's pull up XLK really quick. We haven't checked in on that one. And I can't remember the last time, which is probably a bad sign when it comes to action. Yeah, the ADV in XLK, listeners, is 21,000 contracts. So if you're looking to get some quality tight markets, XLK, not exactly the place. Mr. Meatball, what are your thoughts? First off, on Andrew's trade there of the VIX versus SQQQ. Are you a fan of either leg of that? And then what are you thinking B, a wonk of Wall Street's version where he had SQQQ and also XLK put options instead of VIX, sir?
Andrew actually did another one of those SQQ versus VIX trades today. And I think he did better on the VIX side than he did on the SQQQ
Yeah, the SQQQ that's the crappy end of the crap, right?
Yep, absolutely. And yeah, XLK is a hard one because it is wide and it doesn't trade that much. The QQQs are far more liquid. It's the second most active ETF. A lot of the X names, the ones that really do trade are XLE and XLF. A little bit of XLI, but yeah, XLK is kind of the unloved brother of QQQ.
Yeah, once you get past XLE and XLF, it falls off pretty quick, listeners. Yeah, I like the VIX leg of that. I didn't want to get more umbrage from the Rock Lobster by saying I wasn't a huge fan of the SQQQ leg, but I think you can see why I wasn't excited about that. Speaking of excited, Mr. Meatball, Jake Tilley sounds like he's excited by you. Your comment you said earlier about SKU getting flat in NASDAQ, that's usually a sign we're hitting a bottom in the sell-off. Jake Tilley just wrote #well put. So there you go. Someone actually agreeing with you for a change, Mr. Meatball. Must be nice.
Yeah, you might say well call, right? Because you want to buy calls, not puts.
Oh, well played, sir. I like that. Well done. A little bit of pun action from deep in the heart of Texas. Another comment coming in here from Flo Algo says, hard to argue against having some VIX calls in your back pockets for a week like these. Yeah, they're nice to have. Like we said, though, it's a little bit easier with them than it is with VXX, but not that much. You still got to be pretty aggressive on the trigger finger when you get these pops. Again, to mock the Rock, I was giving your counterpart there, Mr. Rock Lobster, a hard time yesterday because he was getting pretty outlandish some of his offers when his VIX called. I said, I think he got a couple off, which I joked was the top. And it turned out it was exactly the top. Once he got any of his calls filled, that was the end of the upside for Vol. So he killed it. Blame the Rock Lobster, the listeners out there. But Mr. Meatball, and I know we've said this before, but when you got these calls and the Vol products in your back pocket, they work and it's nice, but you got to get the heck out of Dodge pretty quick, sir, right?
Yeah, when you own a long call in a vol product and we're not having like a last year's type of event, you have a day to trade it, maybe an hour. You don't have months and months and months to sit on those. Again, I'll say it one more time. You buy these products intraday, not even a week ahead of time.
Yeah, I mean, that's kind of the use case they've certainly been fulfilling over the course of the past year out here. We'll be nice. We got so many questions. Let's get to a couple more here before we get to our crystal ball madness. And Nick's VIX wants to know the status of V-spikes. Is it being disseminated? Yeah, I'll say that for the spikes folks, the MIAX folks. It is being disseminated behind the scenes. I don't think they're disseminating it to the public as of yet, but we'll get an update when the MIAX folks join us again. What exactly is the status of all things V-spikes? We got a couple of related questions. Let's go out on these. This come from TLTZ, and that's a hard one to pronounce. Sechty. SEZCHDY. Let's go to TLTZ first. As I'm hearing all this talk about fixed income volatility, but can't find any quotes on good old VXTYN or TY VIX. They kind of played with the symbols there a little bit. That was the old or former CBOE 10-year U.S. Treasury Note Volatility Index. He wants to know what gives. And then Sechty says, what are your thoughts on the CVOL indices recently launched from CME Group? Interesting VIX competitors. And he puts a link to them. Yeah, these kind of two questions are related there because I think the demise of the SIBO vol product on these commodity type indices and other things, obviously they were disseminated off of CME data. And CME towards the middle of last year said, yeah, not so much anymore. We're kind of going to do our own thing. And their own thing is now this CVOL, which check out our TWIFO program if you hadn't. We've had Derek Salmon, kind of the keeper of the CVOL over there at CME on a couple of times, including just a few weeks ago. And they are pretty interesting. So far, CVOL is effectively listed right now on a handful of products. They got the 10-year, 30-year, and 5-year. Then on the FX, they have a whole suite of FX. They have the Aussie dollar, a yen dollar. They have the pound. They have euro. All the big FX kind of pairs they have there as well. On the metals, they have silver and gold. On energy, they have nat gas and WTI. And on the ags, they have the beans, the wheat, and the corn. So you got a lot of your major products. You got a CVOL. And what the hell is CVOL? Click on the link. You go to search for CME and CVOL. But what it is effectively is kind of analogous to VIX. It's not like NASDAQ with the vol Q where it's just straight up at the money. This is actually incorporating the skew using a different proprietary methodology that CME has versus CBOE. We don't have time to get into all the differences right now. Check out the link there at CME. You can look for yourself what the differences are. But it does incorporate skew, which is kind of interesting. Now, this is not tradable yet. This is right now, I think, just still end of day. So it's still very early days. They're hoping to get it intraday first. I couldn't even get Derek to nail down a launch window for any sort of viable tradable index, let alone the options and futures they're in. So I don't know if we're looking at anything tradable this year, listeners, but it is kind of cool. Mark, you have any thoughts here on the end of the old SIBO U.S. Treasury Note VIX? And then also, if you have any thoughts on these CME CVOL products, have at it, sir.
I think the CVOL thing's a good idea. I don't know if you're going to be able to make anything tradable on it. So far, these have not taken off. Bond vol's been in the toilet for 10 years, so that's part of the reason. Yeah, I never really understood why the VXTYN. I don't think it ever really took off. And the futures. How many futures did they trade? Like 3 maybe total. It just never really worked as a product. And what I don't understand is why they don't have something based on Eurodollars, because that's actually we talk about SPX and those a lot. Eurodollars trade massively over on CME, and there's no vol product on that. That would be the one that I would think would be interesting.
Yeah, that would be interesting. I think maybe part of the problem with that is just so many effing months and strikes out there that you'd have some data, that's for sure. And they do a lot of paper, 6 million contracts a week sometimes. But yeah, you're talking months and strikes for days. Maybe it's just an overwhelming amount of. Maybe they wanted to come to grips with something smaller first before they get to the big beast. But interesting stuff. Great questions. Now it's time to get to the most difficult part of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. And we had quite the vol pop over this week. Of course, I have a feeling if the show ran a little longer our prognostications might look a little bit better. Tom's actually looking all right. Tom Jark from MyAx was on the show with us last week. He was at a 25.5. He was feeling the upside. And right now, Spikes is at about a 26.60. So that puts him off a little more than a point, but still more relevant than either Mr. Meatball or myself. Mr. Meatball's at a 22.22. I was at a 24 double. VIX Cash is hovering right around a 26 level. So it's obviously north of there as well, even though Tom's looking the best of us here. Of course, wait an hour or two, my 24 double might be looking a little bit better out there. So Tom, wherever you are, you don't really win, but you're the first of the losers. Let's go on out there. Mr. Meatball, since you were lower than me several points, you'll be the second of the losers. So I shall go first this week, even though I don't really merit any sort of victories. No laurels for me this week, listeners. All right, so I had about 26.5 in Spikes and about 26 or so in that range for VIX Cash. They're coming for this vol pretty aggressively, even though, like I said, they've also been prone to jack it up when we do see any sort of sell-off. And outside of today, we haven't seen much mitigation of the sell-off of late. So, I don't normally do this. I kind of like where I was today for next week. 24 double. Now, there's a good chance we could erode right past this and get back down to threatening that 20 handle again in VIX Cash if we keep the rally going. And I wouldn't be averse to that. It's just I kind of like, so I'm going to stay where I am. 24 double. Mr. Meatball, I got a feeling you're going to go where you were this week, if not below, sir.
Yeah, let's do it again. Let's do 22-22.
Let's just pretend this week never happened.
Never happened.
20, maybe we'll throw Tom in there as well, 25.5. So there you go, listeners. There's our market. 24 double, 22. Who says we can't lose gracefully here on the show? We'll just pretend last week never happened. All right, listeners, that music. There it is. Doesn't want to seem to come on today. That music means we've come to the end of another epic journey through the world of volatility, listeners. Hopefully you liked, as our listeners called it, 60 jam-packed minutes of volatility goodness. You have something else you want us to hit on the show? Hit us up. Remember, it is only an hour show, so we can't do everything, but we try to get to all the stuff you folks are interested in. And of course, we like to hear from you guys, so keep sending in those questions and comments. Mr. Meatball, if folks are intrigued about what you're cooking up over there, where should they go? What should they do?
Yeah, go to optionpit.com, sign up for our newsletter. I'm putting out VIX content every day. Make sure you're checking it out. And then I also do put out a second letter a couple times a week. So if you want to know what I'm thinking on a real-time basis, that's the best way.
There you go. Optionpit.com. You know where to go. Talking about all things spikes. It is myaxoptions.com/spikes. That'll get you all the data, all the press releases. So things like the V spikes, when that's coming out, that'll all be answered on that page. You got the historical data as well as links to a cool show called Volatility Views. I ask you, what more could you possibly ask for from a volatility-oriented destination? If you want to know all about execution services and trading tech, you know where to go. It's matrixexecutions.com. Pretty easy. MATRIX executions.com is the place to go. And on behalf of everybody over there in Matrix land, everybody over there in MyAx land, and everybody in Meatball land, and indeed myself, I want to thank all of you out there for downloading and streaming and subscribing, for listening to us all week. We love you all. Have a safe, happy, sane weekend. We'll back again next Monday, kick it all off again on the option block, all the way through to Friday, and another episode of Volatility Views.
Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.